I remember when I first got into trading, there was something I struggled with a lot, and it was whenever I went to trade or place a trade, I just froze up and I could not market execute my position at all. It got really, really bad. And I looked more and more into this, what was this? Why was this happening? And I found out about something called fear of entry. So what actually is, fear of entry? This is something that essentially clues in the name that when you enter a trade, you freeze up. You have a fear of entering that position. And it stems for a lot of reasons, both, all kind of psychological reasons. But I wanted to talk a bit more about it today because this was something that I spent months trying to overcome. It was by far my hardest psychological test in my trading. And I wanted to share a bit more about what it is, why it happens, and how you can actually overcome it so that if any of you have struggled with it, you can also do the same. So why does it actually happen? Well, there's quite a few reasons. The first reason is the fear of losing. And this is kind of the biggest one, right? When you're trading, you are, risking money, you're risking capital, and there is a chance that you lose money. And when you're a new trader or someone that hasn't got into trading for a very long time, that fear is new to you. You've never experienced that kind of risk, because normally when you're a new trader, if you in a normal world spend money, you expect to get something back from it most of the time. Whereas with trading, you could lose money and get nothing for it except a lesson, I guess. So that fear of losing is very new, very real, very raw, and you don't know what it feels like, and you're scared to lose. Now, on the other side of that, it could also be a case of you're trading with more than you could afford to lose, but this isn't always going to be the case. But this could definitely also happen to someone like that. If you're not used to trading in 100k FTMO and then you suddenly jump to it, even though it's not real money, it's going to feel like real money, and that fear of entry could potentially kick in for you, which is why I always say to kind of gradually scale up your prop firm sizes so that you have time to adjust to it. But going back to the fear of losing, you very rarely, if you're not in trading, put yourself in a position of risk and sort of that associated feeling. And so if you imagine yourself on a cliff or, doing cliff jumping for the first time, very extreme example, I know, but if you're not used to that, you've got nothing to kind of go off. You've never done it before. And it's the same with trading. That risk feels very real to your body and it feels like a threat, and it doesn't want you to do it. Hence, the fear of entry kicks in. That's very, all good and well said for new traders. The fact that they're probably risking potentially more than they're willing to lose. They're not used to risk and they're not used to losing. So those three things are very true for new traders. But what about people that have been trading for a while? Why do they still get it? And the key reason is that they don't have any trust in their strategy because they don't have any data. A lot of traders that are maybe 6 months to a year into it, they might have taken someone else's strategy, they might be using other people's signals, or they're just kind of willy-nilly trading, something they've seen off YouTube. And they don't have any data to prove to themselves that they actually know this strategy works. If you picture it like this, where you have one trader that is trading a strategy they saw on YouTube, they've never tested it before, and they're trading it, and they don't know sort of how many losers they're going to have before they have a winner. They don't know what the win rate looks like. They don't know what they'd make over 5 years. They don't know how it would do during COVID or other high impact times. So you have that trader, and then you have the other trader that knows exactly how many losses over 5 years, what their max drawdown is. They know their win rate, how much they expect to return year on year average, their profit factor, their CalMAR ratio. They know everything. Who is going to have more trust in their strategy? Probably the trader with the data. And so what with a lot of traders have is when they don't have this trust, again, they've got nothing to kind of soothe that fear of entry feeling. So what do? They get fear of entry. Whereas the trader with all the data to support their strategy, they don't get that because they know exactly what to expect from the markets. And so the key thing that you need to avoid, or that you need to have, is trust in your strategy. And the only way you're going to get that is through data and back testing. So I've kind of moved on to how to stop it. And as I said, one of them is having data. But how else can you do it? Well, for new traders, you need to get, as I said, used to the feeling of risk and the fear of losing, or the getting used to losing, because both are very common in trading. You're always going to take more risk as you scale your capital, and you're always going to lose. That's just part of the trading game. So you need to expose yourself to both of those. And I've done a video on poker before around its severe similarities to trading psychologically, and by no means am I advising anyone to go out and gamble and play poker, but there is a lot of benefits that can come from playing poker and being a trader. And so playing poker would expose you perfectly to the psychological sides of trading. But again, I'm not promoting gambling. Other things you can do is, you know, just trade demos, see what losing feels like, get used to entering, start with small accounts, as I always say, with personal capital, get used to it that way. And over time, you'll get more used to losses, and you'll get more used to the feeling of risk. Nothing's going to happen quickly, of course. You know, as I said, I struggled with this for like a year, and a lot of psychological roadblocks that you hit do take time, because you're essentially rewiring your brain and rewiring how you think about things. But exposing yourself as a trader to risk and losing is going to, you know, set you up for a really good future in trading on the psychological aspects. Now, what about sort of the physical things I did? Well, the first thing I did was set limits. This is so important because fear of entry normally happens when you're actively clicking buy or sell. If you take away that option and you set a limit and just go about your day, you don't have to think about it. It becomes far more or far less autonomous than doing it yourself. So when you see a setup, just set a limit and then close the charts. That's the key one. Don't watch it go to your limit. Set your limit, set your TP, set your SL, and then go about your day. It's hard, believe me. As I said, I did the same thing, but it does over time make it easier to manage, and then eventually you can start market executing without, you know, that fear of losing. Once you understand risk, once you get used to losing, once you sort of mute that fear of entry feeling, it becomes a lot easier. So as I said, set limits and don't watch the charts. Those are the two key physical things you can do to reduce that fear of entry. Let me know what you think. Hopefully, you know, you find these tips useful. Let me know if you struggled with it or do struggle with it, because it does take time. And as I said, this was the hardest thing I had to try and overcome. But let me know what you think about, you know, what I've said in this video. But I hope you enjoyed this video, and I'll see you in the next one.